Welcome back to Your Real Estate Voice with Barb Schlinker, the weekly radio show that informs and educates you on how to buy or sell real estate with Barb Schlinker, the owner of Your Home Sold Guaranteed Realty. Now, Barb, some buyers are sitting on the sidelines. They're waiting for prices and interest rates to come down. Barb, how do home buyers financially prepare before they go about buying a house here in Colorado?
Well, I would say if you haven't purchased a home before, a lot of people are really unfamiliar with the process. They might have bought a car, which is pretty straightforward. You go to the dealership. They're always trying to get you to get financing through them, and you sit down with this loan approval guy, and okay, you're good to go, and all that. But it's not that simple. It's a much more in-depth investigation when you sell a home because it is what they call a real asset. It's much harder for the lenders to take back the property. They could repossess a car, but repossessing a home takes months and months. There's a lot of risk to it. So there's a deep dive into your financial world in order to give approval for the buyer to own the house. And a lot of people are not familiar with the process. So they might think their credit score is okay. And maybe they have a little bit of money saved up, but they just don't know whether or not they qualify or how much they qualify. So we're going to talk about this in this segment. So some do's and don'ts on what to do to get ready to buy a house, how much money you should be setting aside, what lenders are looking for, just so that you're ready to go when it's time. First of all, credit score is absolutely critical. So generally, if your score is below 620, you can get a loan all the way down to 580, but it's a little bit tougher. So the stronger your credit score is, the more likely you're going to get approval and more likely you're going to get more competitive interest rates when you buy a house. So make sure that just on normal day-to-day life that you're paying your bills on time. Use less than what's available, like on your credit card. So as an example, if they give you a credit card with the available balance of $10,000, it hurts your score to max out that credit card. You're better off having it 50% or less than what's available on each card. And don't go out and apply for a bunch of new credit cards unless you have no score. And it's Richard, you might have this experience with your kids, but I know my son, he doesn't really use credit. He buys everything with cash. Um, so I don't know what his score is, but we as a family got together and got a credit card together, and we are carrying a balance on it just so he has some kind of score. So there are, with that generation, the millennial generation and younger, a lot of them are not really used to using credit, so they may not have a score at all. Is that true for your kids?
I think it is. I think a lot of young people are in that situation. And honestly, I think that's why you provide such a service by helping people younger and older get through and navigate some of these issues.
Yeah, and so if they don't have a score, they can score you based on paying your rent on time, or maybe your utilities on time, or your phone bill. I'm sure you have phone bill and maybe internet. They can manually score you based on that. So in that case, don't apply for new credit unless you don't have a score, and then maybe it's okay to go and apply for like a secure credit card at a bank. So, all right, give me $500 that I could borrow. You borrow a little bit, go buy some gas, and then within that month, pay it off. And just do something like that every month. And that can help your score as well. Now, as far as down payment, you can actually buy homes these days with zero down. Even if you don't have the veteran benefits of zero down loans, there are zero down loans and down payment assistance programs out there. But the key to the whole thing is, can you afford the payment? So in general, the lenders will qualify home buyers up to 50% of the family's gross monthly income can be in the form of debt. So what defines debt? It would be house payment that you're applying for, credit cards, and car loans. Not typically not utilities or not phone bills or things like that. So that's a pretty good benchmark. 50% though is high. It's a little uncomfortable. The wise thing to do was if you had a husband and wife team to only try to qualify on one or the other income just in case something happens. But a lot of people with the prices and the interest rates as high as they are right now are having to qualify for using both of their incomes. So both of their scores have to be good as well. But there are certain loans that you can get. You can get an FHA loan for 3.5% down. You can get a conventional loan for 3% down, even zero down with down payment assistance programs. But if you do plan to make a down payment, make sure you save more than you need because you're going to need about 1 to 2% of the loan amount for what they call loan closing cost. Plus, the lenders are expecting you to have some kind of savings in the bank for what they call cash reserves, meaning that you could cover 3 to 6 months of a house payment. That kind of savings should be sitting in the bank somewhere. In order to buy a house. Now, a lot of people can use, if they have savings like thrift savings or 401k, they can use the money in there as their cash reserves, but it's better to have the cash. I recently had these two buyers, they were sisters that live with their parents. They saved up, it was about $130,000 to buy a home. And they put that much down. They spent a little in the mid fours for a home over on the west side. And I was so proud of them because what they did, they did the right thing. They paid more than 20% down. They had enough for their closing costs. They had cash reserves. That really puts them in a strong position. If anything happens, they have a lower payment and they're able to weather the storm. But in general, lenders are looking for what they call debt to income ratios. So the best case scenario would be less than 43% of your gross monthly income would be in the form of debt, house payments, car payments, credit card payments, but they can go up to 50% for certain kinds of loans. And then you can actually, there are a whole bunch of really good rent versus buy calculators online. So you might want to go and look at some of those things. You can just Google that rent versus buy calculator and kind of get a feel for that. There are some benefits of owning a home in that you get to control the payment. Once you have the payment established, it's not going to change much at all unless the property taxes go up or homeowners insurance. But in general, the payment stays stable versus if you rent, the rent goes up over time. So that's what those calculators do. And another thing that we provide is we give our buyers access to homes that are not available on Zillow or other tech company websites. And did you know, Richard, almost a third of homes that are sold these days don't ever hit the open market? Did you know that?
No, and I think that that's something that people would only know, quite honestly, Barb Schlinker, by listening to you over and over again, especially on this show. You're bringing new information to people. I would have never guessed that.
Yeah, so we actually give our VIP buyers access. We have almost 200 homes just on our little web portal of homes that are available that people want to sell, but they don't want to go on the open market and deal with that whole thing. So right now there's about a 10-year high of inventory, and some of the best deals actually never show up on the open market. But if you can buy in Colorado, it's actually a great place to invest in real estate over time. I'm not talking a year or two, but over 3 to 5 years, in general, home values go up and there's an increasing demand for homes. Rent has gotten crazy expensive. Have you talked to your kids about that, Richard, how much rent costs right now?
Compared to where it was a couple of years ago, I don't know any young people who aren't really struggling with that. And I mean struggling with it.
Yeah, they're having to do lots of roommates. It's not fun. And buying a home is actually a very fun experience. It's like shopping on steroids, it's exciting. Most people want it to go well. And the buyer's biggest fear actually is missing out on the perfect home. So we can help you do that. But the first thing to do for most people is to get financially prepared because you don't want to buy a home and be strapped with it. That's probably not a good idea. But once you get financially prepared, it's really a lot of fun to go out shopping, and we can help you find the best financing. We can also do things like get you access to these homes that are not available online. And all you have to do is give us a call at 719-301-3900 or go to barbhasthebuyers.com. And when we come back, we're going to talk about some do's and don'ts to be financially prepared to buy a house. Richard?
You're listening to Your Real Estate Voice with Barb Schlinker of Your Home Sold Guaranteed Realty. And if you're thinking of making a move, call Barb 719-301-3900 or visit barbhasthebuyers.com. So, Barb, what are some other things that home buyers should work on to prepare financially to buy that home?
Let's talk about the do's of getting financially prepared to buy a house. Number one, try not to freeze your credit. I know a lot of people do that because they'll get notification of, oh, the gas station got hacked or something like that. When you're buying a house, you need to be unfrozen so that the lenders can really deep dive into your credit picture. I actually had a buyer that froze her credit, and it turned out, we didn't find out until we were almost to the finish line, that she owed the IRS money and she had not set up a payment program to do that. She would have qualified had she done that, but the lender didn't find out to the very end. In the end, her loan got denied. She'd already given up her apartment. I mean, it was a really sad story. So I didn't know the lender didn't look into it. So the one thing that you want to do is make sure you're dealing with professionals that know what they're doing. Unfortunately, in the state of Colorado, it's not a high regulatory environment for real estate. To be a real estate agent, it's 1 month of school. To be a mortgage broker, it's even worse. It's 2 weeks of school. And most of the buyers actually believe people that say, oh, I'm a licensed mortgage broker, and they're professionals if they know what they're doing. And that's not always guaranteed. So definitely do your homework on who you're going to work with. And buyers need to ask the right questions. Like if you're talking to a lender and they're asking you questions and they're deep diving about stuff, be open and honest with them, even if it's uncomfortable, because they're going to find out in the end, and you don't want to spend all this money like inspection, appraisal, and all that, and give up your apartment, and then find out you can't get the loan. Be totally prepared when you do this. And we'll talk about the don'ts. Those are more important. Don't apply for new credit lines. Once you've applied for your loan and you've gotten pre-approved, stop buying stuff. Don't make any large purchases. If you are making a large deposit, like if your family's giving you some down payment money, that's fine. The lenders are going to ask for a paper trail of where that money came from. And please don't quit your job. So if you'd like to get insider access to our off-market homes and become a VIP buyer, all you need to do is give us a call at 719-301-3900. That access is going to give you information like distress sales that we have coming on the market, foreclosed homes, off-market properties that represent the best buys. And all you have to do is give us a call at 719-301-3900 or go to barbhasthebuyers.com. Richard?
You're listening to Your Real Estate Voice with Barb Schlinker of Your Home Sold Guaranteed Realty. If you are thinking of making a move, call Barb 719-301-3900 or visit barbhasthebuyers.com. When we come back, we're going to be discussing the top tips to increase the sales price of your Colorado home. Stay tuned for that.